Hey guys, hopefully everyone is doing well. Today's target is to solve question number 13. The chapter which we are related with is company's financial statement, and here you can see the shape, or as an overview when you will see the question, there are two different columns present, one on your left side, one on your right side, and you can see that total of both columns is available. Total of both columns is available, which means it's a trial balance. We will be in little bit comfortable situation where assets and expenses are present on this left side, and liabilities and incomes are present on right side. Both are segregated. Then we have few adjustments related to this question, which means these are the amounts which should be present in trial balance, which were supposed to be present in trial balance, but due to any reason, amounts were not included. And we are going to include amounts of these adjustments in the question. Obviously, if both are present at the same time, we will be solving adjustments as our first step. And now let's look up our performer, and you are well familiar with the procedure, but let's see whole performer in a blink. We have three sides, three on our left side, three parts on our left side. First, this one is basically to calculate gross profit, called direct side. Then we have second, indirect side. It would be used to calculate net profit. Finally, we have appropriation side to calculate appropriation balance, and that would finally be transferred to liability side. And in liability side, we have fixed and current liabilities. When we will add it in reserve, we will get total of liability side as well as total of balance sheet. Then on asset side, we have fixed and current asset. Beside this, we have investments. When you will add three parts, fixed and current assets plus investment, we will get total of asset side or total of balance sheet. Guys, in this way, you can see that what our target is, and you are now be mentally prepared what we are going to do today. Here is our question, and as it was described that if adjustments are present in any question, we are going to solve adjustments as our first step. So let's begin. We are ready to start. First, outstanding expenses audit fee. Since audit fee is part of operating expenses, so here we will go in operating expense size. This is your operating expense. First you will mention audit fee, and after that let's correct audit fee, and you will add if there is any outstanding. Here we will be recording outstanding expense, and the amount of outstanding fee is 1000 present over here. Write down 1000 in operating expense side, and now you will go to liability side, current liability, and here you will mention outstanding audit fee. Amount of 1000 would be mentioned over here. You can see both effects are completed, one on left indirect side operating, second on current liability side. So in this way, each and every adjustment present over here will have two effects. Now interest on debenture for 6 months. If you are unable to see little blurry image, by 6 months for rupees 10,000. For interest on debenture, we will again go to operating expenses. Interest on debenture simple. Then we will see if there is any outstanding. But right now it is said 2000 is outstanding. First effect is completed. Second effect, please note it down. We will go to fixed liability side. Debentures are noted, and we will add any outstanding interest on debenture, and that is 2000 mentioned in the question. Again, both dual effects are in front of you, one on left side, one on right side. It means interest on debenture is completed. Next, machinery of 20,000 was purchased installed on 1st October 92. If you are again not able to see, please note it is 1st October 92. And now we will see whole machine, and the date is very important. This is 1st October. So here in fixed asset, we will see machine and then depreciation first and depreciation second. Why we are doing this? Because machine, actually we will see how much value of that machine. Look, plant and machinery 50,000. So here we will put 50,000. But depreciation, when you are going to calculate, there are two parts. First, 30,000 of machine, and secondly, it was described that a machinery of worth 20,000. These are two different parts. Once again, I'm telling you, look at here. Machinery of 20,000 was installed 1st October 92. It means we will be calculating depreciation in a little different way. And why? Because time period of both machines are different. And here we are going to calculate provide depreciation land and building on machinery and plant 10%. So rate is 10%. Here you are going to calculate 10%. But please note it down. We will see the date. Date is 1st October and our last date is 31st March. So note very carefully. 31st March 93 is our last date and 1st October. So start counting. October 1st, it means October would be included. October, November, December, January, February, March. So it means 6 months we have used this asset. So let's go, and now we will be writing depreciation. Over here, fixed asset, as you have seen that 10% depreciation, and only for 6 months we will calculate this depreciation. Now once again, what is 20,000? This is amount of asset which was installed on 1st October. Then we will take 10% and then we will multiply 6 divided by 12 to get our depreciation. This is your first depreciation. Now for second, please note remaining asset has the same date, no need to mention months. It means the asset 30,000, value of plant, and then we will take 10%. So depreciation is calculated. So first time we have seen asset was a single entity, but we are calculating two different depreciation because this machine was having further parts. One part of this machine was purchased on 1st October. So we have calculated its depreciation only for 6 months, and remaining depreciation is normal. So guys, you have seen that we were at second adjustment, and here machinery worth rupees 20,000 and its depreciation 10% completed. But you can note that provide depreciation on land and building is also present over here. So here we will write land and building less its depreciation. Let's see how much value of land and building is. This is first value 70,000. So here 70,000 is value of machine, and we will take the percentage. The percentage provided there was 2 into 1 over 2. Once again, I'm letting you know that it's 2 into 1 over 2. If you are again unable to see, I am telling you that land and building is 2 into 1 over 2. 2 into 1 over 2 means 2 and half. 2 and half means 2.5% you will take. So in this way you will be able to calculate depreciation. So please note, what was 70,000? That was a value of land and building, and then we have taken 2.5%. In this way depreciation is calculated. Value of this asset was 70,000. In this way second adjustment is completed. There were two depreciations and both depreciations we have calculated and written. Third, prepaid insurance. For that we will go to operating expenses, and here we will write insurance first and then less its prepaid. Amount of prepaid is mentioned in adjustment, which is 400. Just write down 400 in operating expenses, and then you will go to current asset side, and here you will mention prepaid insurance. Amount is 400. Adjustment number 3 is completed. Now let's see what fourth adjustment is saying. Director desire the following appropriations. So we are now directly we can transfer these amounts to appropriation because they have already described it. First, 5,000 to debenture redemption reserve. So here debenture redemption reserve amount is 500. 500 or 5,000, let's check it out again. That is 5,000. Okay, first effect is completed. Now for second effect we will go to current liability side, and here debenture redemption reserve, since it's just increase, we will use current liability side. Now let's see what other elements they are asking. 2,000 to general reserve. So here we will write transfer to general reserve, and I think amount was 2,000, and let's see, yes, it's 2,000. So first effect is completed. For second effect we will be going to this current liability side. As you can see that all these adjustments are directly related with liability side. So here same, transfer to general reserve, we will mention amount is 2,000. So guys, in this way two parts are completed. Third is dividend on share capital. So again dividend is part of appropriation account. Rate is 8%. Let's mention over here we need to calculate dividend. For that 8%, although it has been said, but we need amount of capital, and look at here, 1 lakh is amount of capital. So we will calculate over here, and you will take 8%. As I have told you, the rate present over there is 8%. Once again, please note, amount of capital 1 lakh you will take, and then you will take 8%. So amount of dividend is calculated. Now next step, we'll again go to current liability side, and here we will mention dividend. The amount which we have just calculated is 8,000. So in current liability side we will mention 8,000. Alright guys, after dividend we have provision for tax. This is also appropriation activity, provision for tax. And how much provision has been made for tax? That is mentioned as 12,000. So let's write down 12,000 in appropriation side, and we'll go to current liability side. Here you will mention reserve for tax, provision or reserve, one of the same thing. Okay, so you will write 12,000 in current liability side as well. So guys, you have seen that all appropriation activities are completed. They were 4. Next, number 5, write off 50% of preliminary expenses. So you will go to operating expense side, and here we will first mention preliminary expenses. Now let's see how much total amount is mentioned in our question. Preliminary expenses, these are preliminary expenses, 2,000 total amount, and it is said to take only half. So multiply by 1 divided by 2. Once again, I'm telling you what was said over here, 50%. So you may write 50%, or you may write 1 over 2. This is one of the same thing. 50% mean half. So here we are going to calculate what was 2,000 total amount of preliminary expenses, and then we have taken 50%. So guys, you have seen that half preliminary expenses written in operating expenses. Now we will go to current asset side, and here we will mention preliminary expenses because actually they are current asset. So out of 2,000, it should be, let's see how much amount of preliminary expenses was. That was 2,000. One extra zero was there. So 1,000 you have mentioned in operating expenses. Remaining 1,000 would be considered as your asset. Okay guys, fifth adjustment is completed. Now sixth, authorized capital 5,000 of 100 each. So we'll go to fixed liability side, and here we will mention authorized capital, and we are said 5,000 number of shares, and each share has value of 100. Once again we can check it out. Yes, 5,000 and 100 each. It means our authorized capital contains 5,000 number of shares of 100 each. 5 lakh is your authorized capital. Since it is just the nominal capital, it's not actual capital, nominal capital we have written, it would not be included, and we have underlined it. So guys, you have seen that all adjustments are duly added with their dual effects, and ultimately now we are ready to transfer all these elements present in trial balance to their relevant place in financial statements. We'll pick each and every amount from this trial balance and we'll post to financial statement. So first is land and building 70,000, and you can see that land and building 70,000 is already mentioned. No need to worry about that. Next is furniture 4,000, and we have not written furniture, so let's mention furniture, amount of which is 4,000. So write down in fixed asset side. After furniture, we have plant and machinery 50,000, and that has already been mentioned. Plant and machinery, so it's better to write full name, plant and machinery. After plant, we have stock. Now please note the date is mentioned 31st March 93. It means it's closing stock because our last date is also 31st March. And since it is present only in trial balance, it's not present in adjustment, which means it would have only single effect. We will go to current asset side, and here we will mention closing stock, and amount of closing stock present over here is 64,000. All right. So just write down 64,000 in current asset side, and there will not be any second effect. Next, salaries. This is your operating expense, salaries, and here we will mention amount of salaries 4,000. Write down 4,000 in operating expense side. After salaries, we have printing and stationery. Again, operating expense, printing and stationery. I think amount of printing is 600. Write down 600 in operating expense side. Then we have debtors. We'll go to current asset side. Here we will mention debtors, and amount of debtor is 35,000. Write down in current asset side 35,000 debtors. Then we have trade investment. We have already a proper place reserved for investments. Here you will mention an amount of investment is 3,000. Write down 3,000 in asset side. Okay guys, after investment we have cash in hand, current asset. Over here you will mention cash in hand, and its amount is 1,000. Write down in current asset side. After cash in hand, we have preliminary expenses already mentioned in current asset. Look at here, half. Half we have written in expense side, and remaining half is mentioned in current asset side. So preliminary expenses completed. Then we have bank balance. This is your current asset. Over here, you will mention bank balance, amount of which is 12,000. So here 12,000 would be mentioned. Then we have advance payment of income tax. Since you have paid this in advance, it is prepaid. Prepaid would be considered your asset, but it's not an adjustment. So you will mention it only for once. Advance payment of income tax, and its amount is 4,000. Write down 4,000 in current asset side. So guys, you are, I think, very much focused what we are doing. Interest. Again, there is a question whether it's an income or expense. Interest can be received or can be paid. So how we will judge it? Look, this was discussed at start of the question. We have two columns. On debit side, only assets and expenses are possible. Incomes are not possible on debit side. So we are very clear. This interest would be considered as your expense. We will go to other expense side, and here we will mention interest. Amount of interest 1, 2, 3, 4. 1, 2, 3, 4 is 1,000. So here we will mention 1,000 in other expense side. After interest we have debenture interest, and the amount present in trial balance is 2,000. So we have already a place reserved for this. Look, this is for interest on debenture. Once again, I'm letting you know, debenture interest 2,000 is present in trial balance. So whatever is the amount present in trial balance would be written over here. Okay, after, because it's an expense. Then we have director fee. It's also operating expense. Over here we will mention director fee, amount of which is 1000, and we are going to write it in operating expenses. Then we have rent, rate and insurance. Again operating expense, rent, rates and insurance. On the other hand, insurance prepaid is also present. So let's see how we will deal it with, because it is said insurance is included over here. So instead of writing it separately, we will be writing this insurance over here. No need to record in a separate way. So insurance would be recorded in operating expense side, while the amount mentioned over here is 1400. So let's write 1400 in operating expense side. In this way, you have seen that all elements present on debit side are recorded. Each and every particular present over here was carefully recorded in relative place of financial statement. Next is share capital, which is 1 lakh. We will go to fixed liability side, and here we may call it paid up or subscribed capital. The capital which is present in trial balance is actually subscribed capital, and amount of this capital is mentioned 1 lakh. So 1 lakh would be written in fixed liability side. Then we have general reserve. For reserve, places are present over here. General reserve, and the amount is 15,000. We are going to write in liability side. Then we have debentures 50,000, and here already a place is fixed 50,000. Debentures are recorded. Next is bank overdraft. We will go to current liability side. Here we will mention bank overdraft. Amount of bank overdraft is 2000. So write down 2000 in current liability side. After bank overdraft, we have sundry creditors. Again, same place. Sundry creditors, and amount of sundry creditors, this is 8000. Hopefully 8000, because there is a little distance between title and amount. Next, share premium. Again, it's liability, and we don't have sufficient place. So here, this is first time we are including a space in current liability side. Alright guys, so here we will be mentioning share premium. Amount of share premium, I think it's 5000. So here in current liability side, we will mention the same amount. Debenture redemption reserve, again we'll go to reserve side, and here debenture redemption reserve would be mentioned, amount of which is 20,000. Write down in reserve side of liability. Gross profit, so that's a little different thing. It means we are not going to create this cost of goods sold statement. No direct income is mentioned, no direct expenses present. So this gross profit would directly be recorded over here. Why? Because no other element is present. Instead of sales and direct expenses, answer is also available. So 52,000 you are going to write in answer in direct side. Last profit loss account. This is part of appropriation. So here profit and loss account would be mentioned. Amount of profit loss account is 3,000. So just write down in appropriation side 3,000. In this way, all elements present on credit side also recorded, debit side was completed, adjustments were completed. It means we are now ready to start our calculations for net profit. Gross profit is already calculated. So here audit fee and its outstanding. Why audit fee is vacant over here? We'll have to see. Audit fee should be present on debit side. Okay, audit fee is not present. It means only 1,000 is your final amount. After that, look at here, interest on debenture was 2,000, 2,000 was outstanding. Next, rent rate insurance was 1,400, it's prepaid. Remaining all amounts are already in second column. It means we can take sum of all operating expenses. It is completed. Now let's see, operating income is not present. Operating expense is present, that is 1,000. No other income is present. So you may write 0 over here as well. So let's get back. 52,000 was your gross profit. It means now we can calculate our net profit. First, let's take gross profit. Then you will subtract operating expenses 12,600, add operating income which is 0, less other expenses 1,000, add other income 0. So what we have got is our value, and we'll have to see this value once again. We need to confirm all the amounts. 1,000, debenture interest 2,000. This depreciation rate apparently coming over here 2.5. Why it looks like 3, but once again we'll have to see 2.5. And we have taken 2.5, 1750, and this depreciation is not present over here. Okay, what we have done, both depreciations are present on asset side. We were required to write on expense side as well. So depreciation of plant and machine. Amount of depreciation of plant and machinery. Please note these are two, 3,000 and 1,000. What we have said, there were two depreciation, 3,000 and 1,000, and collectively we will write 4,000. Then we have depreciation of second asset which was depreciated, land and building. Amount of depreciation of land and building was calculated as 1750. Write down in operating expense. So here we will take sum again. Sum is calculated. We will now calculate our net profit. First we will take gross profit as usual. Then we will subtract operating expenses here. We will add operating income. Then again subtract other expenses, add other income. So what we have got is 32650, this one. Now let's check it out, answer which is present in our book. So here you can see 32650 is your net profit, and what we have calculated is also 32650. So 2 out of 5 parts are completed. We will now calculate appropriation balance. For that, first we will take sum of all expenses present over here. Let's take net profit. Then you will add profit loss account of previous year, subtract all sum of all expenses, why it is not coming, so we'll have to take it again. This was the sum of amounts. So guys, the balance which we have calculated is 8650. Let's check it out. Now here appropriation balance 8650 is mentioned over here. It means this part is also completed. We will now go to fixed liability side. And here a place is reserved for appropriation balance, which would now be transferred. Amount we have calculated for appropriation balance is 8650. Write down in fixed liability side. It means now we can start our calculation of liability side. Capital plus appropriation balance, and then we have debentures, add its outstanding, after which we will take sum of these two fixed assets, fixed liabilities. This is total of fixed liabilities. After which we are now calculating sum of all current liabilities, and there are two reserves. So simply you will take sum of these reserves. There are three different parts involved in liability side. We were having fixed liability, current liability, and reserve. Then we have taken sum of these three. Finally, we have got 238650, and the answer in book is 238650. Although it's little blurry, but maybe it is in a position you can look at it. 238650. And our liability answer is 238650. So guys, after liability side, we are now ready to start asset side. First plant and machinery, then less its depreciation, and there were two depreciation. So instead of this, we will subtracting both asset less first depreciation less second depreciation. Then we have land and building less its depreciation, got the answer. All fixed assets are completed, which means we will take sum of these three different fixed assets completed. Now we will take sum of values of current assets, that is also completed. Investment has only one amount, and it means all three parts are completed. Sum of fixed asset, sum of current asset, sum of investment. And sum of these three elements we have got 238650, while our liability side was also 238650, which is intimating that our balance sheet is equal. Although if it is little blurry, this is 238650. If it is blurry, we can see that our balance sheet total of asset, balance sheet total of liability is absolutely equal and amount is 238650. So guys, in this way you have seen that all parts related to financial statement completed. Their first part was already solved, gross profit was available, then we have started indirect side. Its answer 32650 was calculated. Third part, appropriation side, was started and calculated 8650. It was then transferred in fixed liability side, and we have taken sum of all liabilities, fixed, current liability and reserve. Their sum we have got 238, and then asset side total 238, which was including fixed asset, current asset total and investments. In this way, everything according to requirement has been completed. Solution is in front of you, but even then I am requesting you, viewing, just looking the video is not enough. You are humbly requested to please practice this question for 3-4 times, and after practicing, if you still feel anything difficult, you are very open to share your problem through messages, text, or you can directly meet to share your problem. I will humbly be trying my best to answer your question quickly. So thank you very much for your time. It's time to end our lecture and it's time to say goodbye. Allah Hafiz.